Today is Wednesday, August 5th, 2015. I'm Mark Dannenberg, CEO and founder of Options Moneymaker, and this is the snapshot, the daily snapshot. So we're going to talk just for a few minutes today about a good setup for an entry. One of the things that traders struggle with is how to find a good trade entry. Well, I'm going to give you one of the best trade entries you can find here on a very, very simple chart with nothing on my chart except support and resistance and Bollinger Bands. We use 2 and 3 standard deviation Bollinger Bands. When you see the price of the index, now I'm looking at the NASDAQ 100 because those of you who have followed me before know that I primarily trade the 3 main indexes, NASDAQ 100, the S&P 500, and the Russell 2000. Don't trade a lot of individual stocks. When you see the price of the index move above the Bollinger Band or below the lower Bollinger Band, that is an excellent trigger to get into a trade. When we see the price of the NASDAQ 100 move above this lower Bollinger Band in the upper set, that's the 2 standard deviation Bollinger Band. When we see that happen, that is an excellent opportunity to get into a declining bias trade. Now you ask, well, why would we get into a declining bias trade? Looks like the price is moving higher. Well, it is moving higher, but this is an overreaction of the price. And what you're going to find the majority of the time is that when you see that occur in a very short period of time, and short period of time could be within the next few minutes or the next couple of days, but in a short period of time, you're going to see what we call a snapback. So we refer to this as a Bollinger Band snap. You're going to see the price move back inside of the Bollinger Band envelope. When we saw this morning on the first hourly bar of the day, we saw it move above the 2 standard deviation Bollinger Band. We saw it continue in the second hour, moving higher. We saw a continuation in the third hour. And then in the fourth hour of trading today, we saw a snapback with a little bit of follow through in the fifth hour. You don't need a significant amount of movement to be able to take profits. So let's talk about what we would do to take advantage of that setup. This, in my opinion, is a declining bias setup, and that's just based on years of experience trading against these Bollinger Bands. If I see a Bollinger Band snap setup, I'm going to take a declining bias trade, and generally the way I'm going to take advantage of that is a very, very simple call credit spread, a bear call spread strategy. It's very, very simple. Our Profit Builder program, where we teach clients how to trade with simplicity, is all focused on keeping things as simple as possible. I'm going to look at where the 3 standard deviation Bollinger Band is placed, and then I'm going to examine where my levels of resistance are. And in this case, my 3 standard deviation Bollinger Band was trading right around 46.37, and my sideways resistance was trading right around 46.38. So right in that area. What I'm going to do is I'm going to go further out of the money, maybe up to 46.50, maybe up to 46.75, and I'm going to open a call credit spread. Now what that means is that in order to get to my strike, the index is going to have to move yet higher. It's going to have to move above the 3 standard deviation Bollinger Band. And the more it moves above the 2 and the more it moves above the 3, the greater the likelihood is of a more immediate snap back lower. So I'm going to place my strikes out of the money. We call that a forgiveness factor. And then I'm going to wait for the snapback and look for an opportunity to take my profit. The other thing is, if you see that type of a pattern on the lower Bollinger Band, it works just as well, especially if it's on the lower Bollinger Band and a rising line of support. You're going to go out of the money below both sets of Bollinger Bands. You're going to go below your line of support, and you're going to go another 20, 30 points out of the money, and you're going to open a bull put spread. It's a put credit spread, and it's going to benefit from a rising bias. We don't intend to be in these trades a long time, but give yourself some room. Give yourself 2 to 4 weeks of time to comfortably manage that trade if necessary. Give yourself 2 to 4 weeks to expiration so that the index has time to move favorably for you. You're going to be very happy with the results if that was the only strategy you used. Credit spreads in conjunction with Bollinger Band snaps on the 60-minute chart. I'm Mark Dannenberg. I manage the Profit Builder program for our clients. We offer an opportunity for clients to learn the simplicity of trading, following along with our trades. And if you're interested, go to ommprofitbuilders.com. Check us out. I'll be back again tomorrow with another update and more information on how you too can learn how to trade with simplicity.